Well, hi, everyone. Good morning, good afternoon, good evening, wherever you are joining us from. So excited to be here for this next conversation for Bloomberg Wealth. I'm Jason Kelly, Chief Correspondent for Quicktake here in New York City at our headquarters. Joining me are Robert Roman, the CEO of MGO Private Wealth, and Louis Barajas. He is Chief Strategy Officer for MGO Private Wealth. They join me from the West Coast. Guys, really nice to have you with me.
Pleasure. Pleasure being with you.
All right. So I want to do a little bit of backstory here, if we can, because you guys started working together just pre-pandemic. We're going to talk about everything that's happened in the last year, but let's do a little backstory if we can. Robert, this is a firm that you founded, you created about 5-6 years ago as part of your journey into the wealth business. Tell me about the creation. Give me the origin story here.
Yeah, no, I'd have to go back just a little bit. Going back to 2020 when I joined P. Weber, then becoming UBS, was in the wirehouse space for about 10 years and spun out into the RIA space in 2011 with the thought of creating more of a family office for our client base. And so fast forward to 2016, MGO being a top 100 CPA firm, top 5 business management firm at the time, decided that it'd be great to partner to include other verticals for our client base. So giving them access to people in tax, giving them access to business management and other verticals that complemented and rounded out family office for us was really important. And so we plugged in our infrastructure in 2016 and created MGO Private Wealth.
And so Louis, sorry, go ahead.
Yeah, no, fast forward a little bit more. Met Louis in 2018 and was just very, very impressed with what he had built, his mission statement as a financial advisor and what he's done just over the years, being an author and just having the credentials that he has. We met, came together, our minds aligned and decided, look, we should do this together. And early 2020 decided to join our firms. And here we are as partners.
So, Louis, tell me about that decision to join forces, because, you know, I know a lot of people watching this broadcast, this summit, have contemplated those sorts of things. This is an intensely people-oriented business. How do you make that decision to come together?
Well, honestly, I'm going to tell you, it was an alignment of values, right? So I used to work with really super wealthy people, and then what happened is my story is I went back to go help the poor for about 15 years and then gradually attracted a whole bunch of artists. And so it's never been about the money for me or what I can do to continue to grow and make more money. It's always been about how we can take care of people and really protect them. And so when I met Robert, it was more of an alignment of values. He didn't come to me and say, you know, we have to make a lot more money. He says, we really have to take care of the artists. We really have to take care of the athletes. We really have to make sure that they're protected. And so I've been about that for 30 years. I've been talking about that and writing books. And I said, you know, this is the right guy. This is the right guy that him and I can really create an impact in the world of working with artists and entertainers and athletes.
So let's talk about that, because this is really the heart of what we're going to discuss over the next little bit, which is who you represent and what you've learned by representing them. I want to go a little deeper on something you just said, because this is a different type of person. This is a different type of customer in many ways. Why is that? What have you seen along this journey as you've started to work with artists and entertainers and whatnot?
Well, so it's right. You're right. We're dealing with people who have created sudden wealth. We have a lot of people that actually come from no wealth, sudden wealth, right-brain people who are not really focused on the numbers. And all of a sudden, there's been this huge mind shift, right, over the last few years where our clients were, if they were making money outside of their profession, they were brand ambassadors, right? Now they're brands. So when brand ambassadors, they focused on getting income. Now we're trying to focus on building wealth and building equity. So it's just a huge mind shift that we've had. So it's, you know, I'll let Robert tell you about a lot of the athletes that he's working with other people. But for me, that's where I've seen the biggest difference in the last few years. And this whole democratization of investing with the Robinhood and it's gotten everybody excited again. And what we've had that 11-year bull market run, right? And then we've got the pandemic and we've got another run going on right now. So there's so much interest in building wealth. Our job is to slow people down and make them think through their decisions when it comes to building their wealth and building equity as well.
So, Robert, brand ambassadors to brands. That is a really, really good way to put it. Build on that for me, because you've seen this play out in numerous different ways. What do you think was the catalyst for that? Because for a long time, a lot of famous folks, especially athletes, were very willing to take a check, put their name on something, and that was a very sustainable and lucrative business, and yet something changed. What was it?
Yeah, no, look, I've been working with talent since the mid 2000s. And to be honest with you, the first kind of initial moment was really 50 Cent and Vitamin Water, if you remember that deal.
Yep.
He took an equity and made a lot of money in that particular opportunity. Then you had other influencers and entertainers that understood that there is an economic value to them as a brand, right? And I think over time it's just evolved. And so the other side of it is in understanding a lot of what's happening in the venture world, and not so much just in public markets. And yes, public markets is a big component of their investment portfolio, but also a craving for what's on the pre-IPO private equity venture side. So I think, the access to information over time has changed and shifted. I think technology has a lot to do with this, and also their ability to really see what's going on because of that access to information. I mean, how simple is it for us to pull up TechCrunch, CNBC, whatever app you have on your phone, and instantly know what's going on? If you go back 20 years, 25 years, that really didn't exist. It was more difficult to get that information. And so I think a lot of that has made a lot of people more has had a big more craving for that type of information and understanding of investments. And so I think people today are trying to understand more of what financial literacy really is, how to position and how to leverage themselves as a brand. We've been doing that through investments and through working with their team and trying to facilitate more family office for our client base.
Robert, I think you mispronounced it. CNBC is pronounced Bloomberg. I'm just kidding.
Bloomberg.
So there you go. So draw that out for me a little bit more. What does ownership bring then? What does being a brand versus a brand ambassador bring in terms of both opportunity and responsibility, both from the perspective of, ownership, making decisions rather than being active rather than passive? There seems to be more financial upside, but there's more than that. And obviously you guys are taking a holistic approach to this. What have you seen in that evolution?
Yeah, I mean, look, I'll kind of give you a case study that I can talk about without really disclosing, too much of it. But there is a big entertainer that we work with. He's probably he's number one in a specific category. And when I sat with him initially, my goal was to really understand him as an individual, understand where he is in terms of his understanding of investments. He had a craving for learning more about financial literacy. One, understanding public markets, but also understanding the venture and the private world. And so when sitting with him, it's really going through the process of just understanding what's organic and authentic to him. One, to help him fully understand how he learns, right? A lot of people in entertainment learn differently than people that went through academics, right? Your Ivy League students that are, it's just a different level of education. And so initially with this individual, it was about, well, look, let's start with some basic concepts. In public markets, you're walking down the aisle of a grocery store and buying the same toothpaste, flip that box. Who owns that toothpaste? Is it Procter & Gamble? Can you buy that stock? That is ownership. That is equity. Okay, let's start talking about other things. What are you drinking? What are you around? What are you using? What apps excite you? Are these things organic, authentic to you? Are they private companies or are they public companies? If they're private companies, well, let's find out who's invested in those companies to see if we can gain access to them. And if it's something that after we've vetting the opportunities, if it's something that really resonates and we think it's a good investment opportunity, let's pursue that. And there is, and what you're doing is you start building out kind of this ecosystem of portfolio companies around a brand. And so in 2018, we actually launched a venture fund for a very high profile individual. And it started out very much with that simple concept of just being organic, authentic with things, and having this thought process of just going after companies that he understands. And slowly, as he began to learn more about investments and learn more about access, we began to kind of just open it up and dial it back, going from late stage pre-IPO companies to now moving it to a Series B, a Series A, and are we looking at seed or not, and what does that mean? And helping them understand that portfolio construction across his liquid investments is very similar to doing the same thing with the illiquid type of investments. The other features of understanding what liquidity and illiquidity mean, and some other risks that we take a look at. But overall, those simple concepts help us to shape a portfolio for this individual and evolve over time. And there was a lot of learning to that, but I will share more with you in terms of what's difficult in this world, because a lot of people ask about access and how do you identify, you look at opportunities, and for us it really started with identifying funds. The top 20 VCs in the world get to see the best deals, the best opportunities that are out there, hands down. And so it started off with identifying who those were, establishing relationships, and ultimately investing in some of their funds. And if you draw a parallel to us as financial advisors and being in an office and watching a mutual fund wholesaler walk through that office to share his fund with you, it's no different. The big difference in that is really the fact that you got to be proactive versus reactive, right? When you're looking at in the mutual fund space, in the public market space, it's really, you're getting pitched stuff. There's no shortage of capital in the venture and the private equity space these days, and so it's so easy to access that capital on that side that you have to be proactive and build relationships with these venture capitalists to really gain access. And I think that's a component that's been a great success for us.
So Robert, take us into the secret sauce here a little bit. How do you build those relationships? I mean, that it all sounds great. It's a really smart idea, Louis. But where does the rubber meet the road here, and what's the playbook for doing this in a way that people who maybe don't have a #1 selling record can leverage?
Yeah, I mean, you don't need to have a best-selling record, right? You don't need to be a top athlete. You need to have, especially in the world that we're in, we're dealing with a lot more accredited investors, right? People who are earning a certain amount of income, have a certain amount of equity, and they have the same access that these athletes can have, right? Because Robert's built a relationship with these private equity people for the longest time. And when we say relationship, it's not because you know the fund. That's not a relationship. A lot of people will tell you. Actually knowing the founders of a lot of these companies, it's a big difference. And so you can give a person out there who's trying to build wealth the same access that you can give access to athletes and artists as well. It doesn't have to be that person making multi-millions who's got this big contract.
And so, Louis, tell me about how the mindset has also changed, which it seems to have changed. And this is where we get into the what have we learned over the last year segment of the conversation. People are looking for more meaning. They're looking for something that leaves maybe a more positive imprint on the world rather than just a bigger bank account. So how do you actually make that happen?
Well, okay, so the biggest difference that I've seen in the last several years was that whole conspicuous consumption, right? Where I had a lot of people would call me and tell me, look what I just bought, or I need a check to get to, I'm going to be buying this, versus in the last year, we've had a lot of artists. For example, I have a lot of musicians, big iconic artists that are traveling and touring all the time who have been home literally for a year. And instead of calling me and asking me or telling me what they've purchased or showing me their watch or showing me their new car, they're saying, what are we investing in? What are you looking at? How can I get involved? So it's been this huge difference, right? And the other thing is that now we're saying it's not how can I also make more money, but how can I have my money have more of an impact? So this whole concept of social impact investing, the ESG funds, right? The environmental, social impact investing has really just taken our clients to another level because our clients tend to be younger people, right? The younger athletes and artists are going to tend to be younger people. So they want to say, now, how am I going to make more money? How is my money going to build wealth and at the same time create some kind of impact in this world? So it's been a really interesting shift as we're starting to see these artists that we're having conversations that we haven't had probably in decades. So it's a very interesting. So we used to have artists that would do that. We'd have athletes that would have those conversations, but not pretty much now. It seems like I'm having that conversation with all my artists.
And so, Robert, do you think, having looked at this business for a while, is this a moment where people are thinking more holistically and thinking about the state of the world? Is it just kind of the milieu we've been living in? Or do you think this is a more permanent or secular shift, as they say?
I think it's permanent. I think, look, we've had a lot of time to sit back and digest information over the past year. I think that in itself was a huge catalyst for the craving of information and the understanding of information and financial literacy in particular. I mean, people want to be smarter about their money. We're finding that they want to be smarter about their brand, right? And Lewis is right in terms of impact. There's a bigger kind of more thinking relative towards not just their immediate and their sudden wealth, how to preserve it, but now they're thinking about multi-generational wealth. And we're getting a lot of that as well in terms of, well, how do I pass this down? How do my children learn about what's happening right now? We've got, clients that we're spending 30 minutes a week with their children, helping them understand, what a stock is, to a point where, some of them now, they're 12, 13-year-olds that can build their own portfolio, and they've done it. And this is part of what's been happening over the past year is there's such a craving for this information that us as professionals really have to, take a more proactive approach towards this multi-generational education and helping them to understand and preserve this legacy that they're building. It's really important to them today more so than ever from what we're seeing.
Jason, I'd like to add to that real quick.
Yeah, please.
So because our clients just, I've had 2 iconic artists pass away and their children have been involved in their legacy. And there's been more wealth built after my clients have passed away. But if it were not that we had done some financial literacy with the children before or got them ready to actually handle the client's business, their parents' business, right? Because remember, artists have music that will last sometimes for years and years afterwards. Movies, we have novelas, new albums that come out. And if we're not teaching the family this, if we're not getting behind their parents, there's a lot lost there. So it's really important that get done as well.
And so, Robert, as you talk about sort of access and earlier on pre-IPO all the way back to seed investments, I mean, there is this question of risk, right? And it all feathers in an interesting way because you're talking about it in many cases, as you guys have both described, sudden wealth that is earned at a much younger age. So tell me about the conversations that you have with your clients around risk and balancing the right portfolio, because this is not the classic accrual of wealth that we often see, someone building a company over the long term, over decades, and then it's sort of peaceful transfer of wealth, as it were, to multi-generations. This is different, and I would imagine the risk-reward equation and conversation has to be different as well. Tell me about that.
It is and it isn't. I mean, look, I think there's this misconception that alternatives and this private equity and venture bucket is a completely separate pie. And the reality is it's part of the pie. It is a sleeve within their portfolio. It's really understanding their risk appetite, their objectives, and their level. It's financial planning. The difference today than there was 20, 30 years ago is really the understanding of how that particular sleeve fits within their overall portfolio. There are other considerations and other risk factors, obviously. One of the biggest ones is liquidity, right? A lot of these are illiquid investments. Again, there's a lot of education that goes into that, but you have to be aware of what's happened in this industry, in this market. There now is a certain level of liquidity, even in the venture world. There are secondary offerings. There are events that allow for people to have that liquidity feature in place. There's also more companies staying private for a longer period of time. So a lot of athletes, entertainers, influencers, and just individuals in general are seeing this happen and want to know how to participate in that component, the pre-IPO component of the wealth building, because a lot of it happens there. By the time they go public, a lot of times, these companies are bigger than most public companies. That's the reality. That's the world that we live in today. So how do we start kind of identifying opportunities, dialing it back, assessing those risk factors, educating our clients so they understand all these different components and layers, but also helping them understand how it all fits within that pie. And I think that's to us, that's just the way we see things. It's more a holistic approach.
Yeah. I want to bring in a question from the audience, and as we talk about multi-generational wealth and conversations with younger people, and this is a bit of a theme that's developing through this conference today, crypto. So Louis, what are the conversations that you're having either with your clients, maybe with clients' children, as they read, whether it's probably on their, I was going to say Twitter feed, but that just shows how old I am. It's probably more on TikTok. They're reading about Dogecoin and everything else that's going on. You mentioned Robinhood earlier, but specifically on crypto, how does that factor in? What are the conversations that you're having with your clients?
You'd be surprised. In fact, today I'm having a 2-hour conversation. I'm working with a record label and an artist who may be putting their very first song on an NFT, right, as a non-fungible token on the auction block. So we're actually having lots of conversations regarding that. In fact, for our clients that are very interested and want to delve a little bit, they're putting their toes in the water, I guess. Some of them have Coinbase. Some of them we have index funds that mimic, like Bitcoin or Ethereum. But those conversations are being had, and not only that is how can they use the crypto space to even launch some of their products and build wealth upon that. It's just not investing, but how they can do that. I'll let Robert tell you, but he's been in that space as well.
Yeah. So Robert, tell me about that, because I would imagine it's a constant conversation at this point.
I had a message this morning from a client going Dogecoin. So yes, it's very constant. And look, again, it comes down to information, right? And I think we've spent a lot of time with our clients helping them understand what blockchain is and helping them understand what cryptocurrency and these coins are. Also helping them understand that, look, a lot of this is new. We're learning as we go. I mean, we're professionals in what we do, but this is a completely new industry, a completely new way of accessing an alternative type of investment, or an alternative, call it whatever you want. It's different and it's new. So we're also making our clients aware that, look, we're trying to figure this out with you. I mean, we don't claim to be the crypto or NFT experts. We do know there are opportunities in the marketplace. We're talking to the people that are, developing. I talked to the guys at Dapper Labs recently. I spent some time with the guys at Nifty's recently. And so we're having conversations with the very high level people to really understand the marketplace and why it makes sense. And then we transfer that information to our clients so they understand what crypto really is. At the end of it, we also give them, the ability to make their own decisions related to that, helping them understand that Dogecoin was really developed as a joke, right? It's a meme coin. And so why is it where it is? You tell me. And posing that back to them a lot of times opens up a lot of different questions and helps them understand all the risks that are there within some of these alternative coins.
But we know it's not going away, right?
Not going
Yeah,
away,
so we know
right?
it's not going to go away. It's not going to go away. So a couple of years back, we thought, well, what's up with crypto? Is this going to stay? Is not? We know now that we actually have to really delve and really get that information because we know it's not going to go away.
Right. As we start to wrap up here, I've got another question from the audience that it's a good one. We haven't talked a lot about climate ESG type funds. That is obviously coming on stronger. Louis, it fits within some of the frameworks that you guys have been discussing, especially when it comes to legacy, when it comes to finding some meaning in your investments. Has that gotten more serious for your clients over the last couple of years, and how is it manifesting?
Well, I'll actually let you share. I'll let Robert share a story right now that we've got with one of our clients who's just made a lot of money, who's basically just focused on the ESG funds. Robert, why don't you tell a story about the person we've been talking to about his whole concept of his focus on ESG.
Yeah, there is a big focus on ESG and impact investing. We've spent a lot of time with this particular individual, founder of a company, saw a big exit, and he's more interested in impact versus return, which is interesting because we're seeing a big shift in that entirely. This happens to be a very wealthy individual, but we're spending a lot of time trying to understand what impact really means to this individual. Impact investing can mean a lot of different things. Passion has a lot to do with it, right? Where do you want your money to go? And so we are spending a lot of time, one, with our clients and helping to understand that, but also trying to understand the marketplace and where to best deploy when it comes to impact investing.
So I've only got about 90 seconds left here before we hand off the baton. So Robert, 30, 45 seconds, what's one trend that you think is going undercovered or not as talked about as maybe it should be as we get into this recovery and deeper into 2021?
Well, it's one trend. Put me on the spot. I mean, I think the crypto space. To be honest with you, I think there are a lot of layers that people are trying to understand, and I think there's more to it than what we currently know. We're trying to identify that. It's really understanding the layers beneath the NFT and the coins. So that is an area where I'm spending a lot of time on.
Interesting. Louis, over to you for the final word. What do you think we should be thinking about as we go through 21? The world reopens, people kind of get back to whatever the next normal is.
Yeah, we can't forget what's happened over the past year, right? There's been a lot of deaths, and I guess a lot of people have been thinking about their mortality and how long they're going to live and what they're doing. I mean, I will tell you the trend that I've spent most this past year, believe it or not, with a lot of my clients has been estate planning and actually making sure that their investments, their businesses, their brand is going to live, and that that it's going to be well protected, because it doesn't make sense to build all that wealth and have all that money invested if we don't have the proper estate plan. But it was only that we've had all these deaths due to COVID-19 that people said, you know what, I need to start making sure that whatever I've built, I'm going to take care of and preserve that wealth. So I haven't had these conversations, Jason, in sometimes a couple of years. I mean, in fact, I have to force those conversations. Those conversations have been very easy this year.